I know it sounds unfair, and all the first-time founders out there will be going, well, that's not me, I can't do it. That's just the way life is. Hi, my name is Gary Smith. I'm a serial entrepreneur in the tech space, and I've raised over £50 million in venture capital from the businesses that I've run. And I, in addition, floated the first SaaS business on the London Stock Exchange. I've learned some really tough lessons over the years. Sometimes we've got things well, sometimes not quite so well, and the reality of raising venture capital is, even for people like myself that have done it multiple times, is that it's really tricky. It's difficult. Investors are tough cookies. Even just getting in front of one is hard enough, let alone persuading them to invest in you. So here are my 7 key lessons that I've learned over the years about the psychology of investors and what they like to see and what they don't. Let's get right to it. So number 1, what's the most important thing that investors want? It is a massive market opportunity. And I mean, not just a massive market, you need to peel away the competitors and show that there's a gap in the market. And that gap is big. I mean, it may not be huge today, but you can see that over time, it'll grow to be an enormous market space. And it needs to be either national or international. If you put a business plan to an investor that doesn't show that it's going to be big, they will not be interested in seeing you. Don't waste your time, build your business without the money. So number 2, so how are you going to get your pitch in front of the investors? Well, you don't know them, so how are you going to do it? So you're going to have to, send an email to info@theinvestor.com, or go on, find out their LinkedIn page and find a few of the partners on LinkedIn and message them directly, and they actually probably have to connect with them first, and they're not going to respond. They don't respond. So what are you going to do? Well, the best way to get in touch with an investor is through someone else that they trust. Maybe a person that they've invested in the past, and they see that person as an authority in your type of business. That has huge advantage. Number 1, you get more chance of getting in front of the investor through that introduction. Number 2, because the referral from someone that the investor trusts means that they're going to treat your presentation and your pitch more seriously. Number 3, the reality is that your pitch is probably not the most important thing when you first meet the investor. What there'll be a little preamble, a bit of a discussion, and they'll be asking you about, so how's the round going so far? If you've got other investors that have shown interest in what you're doing, if you've got a lead investor that's said, yeah, I'm going to do this, that's really attractive to investors. It's like catnip. They love it. It's because that fear of missing out is very, very strong. If you can show these investors that other investors are going to go for it, they're more likely to go for it too. Number 4. Number 4 is traction. And traction normally means sales, right? So it can be other things, but let's assume right now it's sales. What it proves is that companies are willing to pay for what you're selling. What that signals is a number of things. Number 1, if someone's bought your product, well, clearly the product is developed. Number 2, the product works. That's a big step. And number 3, that if that one customer bought it, there may be more customers who will buy it too, so maybe the market opportunity is there. So even if you've only got 2 or 3 customers, that level of traction is a significant risk reduction factor to any investor. So if you have traction, when you first start to discuss the opportunity with the investors, make sure right at the beginning of your pitch deck, you talk about the traction you've got. Very powerful. Number 5, your track record. Now, everyone's, if you've got a good PhD in hard sums, terrific. That's not what I mean here. What I mean is your track record as an entrepreneur. You see, investors like to see second-time founders, third-time founders. If this is your first rodeo as an entrepreneur, there's a big risk there. You may not be able to do this. You may be very good at your subject matter, but can you really run a high-growth startup? So if you haven't run a business before and made an investor a lot of money off of what you've done, then that's a big disadvantage to you. I know it sounds unfair, and all the first-time founders out there will be going, well, that's not me, I can't do it. That's just the way life is. If you've run one before, massive turn on for the investor. Otherwise, not so much. Number 6, intellectual property. So what's intellectual property? Well, it's your product. And if the product itself has significant value just in its own right, then that's very attractive. Let me give you an example. Let's assume you developed the cure to cancer. Well, that in itself, as long as you've got that protected and you've got patents on it and things, that in itself has real significant value. And that means that it trumps everything else. So even if you don't have the other attributes we were discussing earlier on, this still is very powerful and they still will want to invest. So if you have intellectual property in your business and it's deep intellectual property, that will show there's real value in this business and they'll want to have a look. Number 7, are you a visionary? This is a difficult one to describe, but some people just have it, don't they? They have that charisma, the ability to paint a picture of a future where the product that they're going to develop is going to be so significant that it changes the world. And if you have that ability to persuade people like that, then go for it. But I have to say that over many, many years I've been doing this, I've only witnessed a few times that this can happen. So if you have nothing else, for sure, then just pitch up with your charisma and vision. Otherwise, I'm afraid you'll be relying on the other things I mentioned earlier on. So if you're an entrepreneur looking for investment, I really hope that these 7 lessons that I've learned help you in your next raise. And on that note, looking forward to seeing you in my next video.